Bring in Art Cashin, Director of Floor Operations for UBS, talk about the data, the impact on the markets, certainly yields this morning, Art. It's good to see you. Happy Friday. What do you make about the seemingly quick shift we've gone from focusing on inflation to now focusing on growth?
Yeah, I think the market is sensing some surprises. It's been a very frustrating week, Carl. As you may recall, the end-of-quarter rebalancing was going to give us at least mild plus tech closes. We didn't really achieve that at all. And today, new money for the new month was supposed to give us a kind of really buoyant opening. We had a struggle to get to that. So I think the market's trying to interpret a lot of things. I'm a little concerned by the dip in yields here. It would be great if, as everybody said, it just, commodities going down. It's a hint that inflation may be cresting, but they're moving down a bit too rapidly for that. There's still a sense that there's a flight to safety, a feel that whether it's in the Bitcoin or some other area that we may have the risk of a structural surprise here, and I think that's what they were worried about. So I keep my eye on Bitcoin to stay above 18,000 or else, and then on the charts you got to look at things like Apple and Tesla and see where we go from there. With the S&P, if we get weak, heaven forbid, later today, the 3730 area is something to watch.
I'm curious that you bring up crypto, Art, because I wonder if you think it's large enough at this point to pose larger out of asset class type of risk to the broader market.
Yeah, well, I've been in this game over 60 years, Carl, and surprises don't always come from the area you're looking for. That's why they do call them black swans, okay? They're totally unexpected. And the trouble with the Bitcoin thing, I think you saw a little bit of it yesterday. There were vague rumors around about people not meeting margin calls and that the Bitcoin lenders will, by the end of the day, when some numbers came out, we learned that the trouble seemed to be too small to account for the billions of dollars in selling that we saw yesterday. But I think there's a feeling out there that there's a shoe to be dropped. And I shouldn't say the most obvious, but one of the more likely areas they're in surprise because there's not enough data out about it is cryptocurrencies.
Art, obviously we've been doing a lot of talking about the markets and where they stand relative to the calendar and how big a slide we've had in half a year and comparing it to long ago market cycles. I mean, does this one feel like any of those to you, whether it's in the 70s or early 60s or, one of these kind of cyclical moves that seems to come kind of in a hurry as the market tries to anticipate something less positive?
Yeah, no, it certainly, as we've heard again and again, a similarity to 1970, which interestingly was a midterm election year also. And as you brought up, 1962, I was here in swaddling clothes then, just kind of new into the street. But the U.S. Steel and the steel companies raised prices, and Kennedy remarked that his father told him that most corporate heads were SOBs, and that looked like the president was going to go head-to-head with the market. And what that then caused was a pretty big sell-off that started in those days in March, and we bottomed out in around June. So there is that similarity. However, the end of 62, late in 62, we had the Cuban Missile Crisis. So we can do without that, if you don't mind, Michael, okay?